Good afternoon, everybody. It's great to be back with you. Mike Fairborn here for our swing trading class. Looking forward to that shorter term time frame that we're looking at 3 to 14 days generally for an upside move or a downside move in the markets where we do look at stocks as well as options. Great to be here with you all today. Would like to welcome Paul, Lola, BJ, Jay Richardson, as well as Will. Howdy. Hello to you, Tony, and High Speed. Great to have you all on board, folks. Yeah, we've been seeing some moves in the market as of late. I'm going to talk about the dot plot here just a little bit, just as a brief to our opening as we look at the markets, just to see what's expected for tomorrow in terms of the FOMC announcement. I want to talk also too about oil. Oil stocks are in the news because oil is in the news itself. We can look at futures in this class, and I will look forward to doing so. But with that, I would like to just jump into our disclosure so we can get going. Plenty of stocks to look at here, and it is great to have you all on board. We should be joining the chat pretty soon by Barb. In fact, there is Barb. Great to have Barb on board. I wanted to welcome her before I dived into disclosures. I know she's just coming off a class, and so I appreciate Barb being here. It is a privilege to have her on board. Please be sure to join us on X, as Barb has just posted there. Now, you're going to have to type these names out, or the handles out exactly, because there are a few imposters out there. Barb's got several. I've got a few myself. Barb Armstrong, CS. Mike Fairborn, CS. It's not Michael. It's not Barbara. It's Mike. It's Barb. And it's CS at the end. All right. Well, with that, let's dive on into some disclosures to get the show on the road here. Okay, folks, information here is for general information purposes only. Now, options do carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. Short puts, which we'll be looking at today as well, we'll do some comparative stock and short puts at the same time. Again, we got a couple of those to keep an eye on. But a short put risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application is for education purposes only. Investing involves risk, including loss of principal. There's no guarantee that an execution of a stop order, which we do place in this class, will be at or near the stop price. Past performance is no guarantee of future results, and dividends are not guaranteed. Got a couple of those to look at too today. We're kind of loaded today with things to observe in the markets here. Lastly, I just wanted to state that futures and futures options trading does involve substantial risk, not suitable for all investors. Very, very briefly, and I show you these slides because I know many of you that have been to this class, you guys are on board. You've seen this before, but I am seeing a few new names. Welcome to all of you, by the way. Great to have you here. Good afternoon to all of you. And a few more names that I do recognize. Welcome all. Folks, just a quick review. We do look at bull flags in this class. We look at price patterns. We look at patterns on the chart a lot in this class because patterns do have an interesting way of giving us potential targets. For example, the bull flag here, you could see breakout move. This length of the upward move 1 is oftentimes equal to a length 2 to the upside, right? That is a bull flag. We look at bull flags. We've looked at bear flags as well before. We've looked at all kinds of price patterns. We've got more than just the bull flag at stake today, but there will be a fair share. We'll see our fair share of bull flags during our discussion now. Here are the markets. You can see us still gravitating around that 6,000. It is hidden there by that marker, but that is 6,000, big round number. We've talked about this guy before, and I'll tell you what, we've looked at volume at this level with volume profile. I think this is fascinating to look at because you look at the entire volume on the entire year using the E-mini S&P 500 index as a guide, okay, because we're looking at the same basket of companies in that S&P 500. Here is our volume profile. I'll pull it up right now. Just do a quick adjustment down here. Look at the top 10% so we can see volume at price. And you'll see where we're at. It's fascinating. We are right at 6,000. In terms of the point of control, just keep that in mind because if we can get above that level, by the way, we said that last week, if we can get above that level. Now we are above that level and we're just kind of, once you get above there, you might find support there. And that could be interesting for a number of bull flag patterns that might also be mirroring the market to a degree. We don't know. We don't have a ton of breadth in the market. We're lacking breadth, but we're holding this massive level of price trading activity, which is really comprised of all this volume down below. So it is fascinating. We'll have to see what it looks like. We have to say too that there is resistance up top here. But what's interesting if you go back on a 1 year time frame, because we are at all-time highs right there, right? What do you get? We don't see much volume above that level, which means that we can kind of trail faster above that point if in fact, I mean, sometimes you can just start moving quick because you don't have a lot of trading activity, and sometimes prices can accelerate. But, and it is a but, it's something you want to consider. From here to here, there's still a trading range, and we're going to go ahead and just call that resistance. We're going to label that resistance until we get above it. But getting up here, it could be interesting too, because we could start to see some moves in the market if, in fact, that does unfold. All right, now, before we jump off of futures here, I do want to take a look at oil because we are seeing some moves in oil, and geez, I wonder why. Look at the move in oil over here, massive off the bottom. I think it was in this class, we talked about the possibility of a shoulder head shoulder there. We've exceeded that level, that price target clearly, which is this range right here. I mean, we're up here, but oil is in the news because of the situation in Iran, right? And we did break out above this high. We're back up above it again today. Now, if Iran, this is what I'm hearing from the analysts out there, because there might be future higher levels in crude oil prices, but it can depend upon what Iran does. What they're talking about, analysts, are in the Straits of Hormuz, which is a shipping lane, very, very popular area. But what the analysts are saying that you could expect to see 100 if Iran starts to mess with the Straits of Hormuz. They booby trap it or whatever. They try to shut it down to 130. Now that could ignite, that could fuel, so to speak, a number of oil stocks as well moving up there. We're going to take a look at that in just a little bit, but that is just part of my intro spiel because we are seeing some strength within oil, and that it might continue. It's been down for a little bit, but that is a very, very strong bar, but there's still quite a ways to go if we do see continued disruption, that 100 level. A lot of analysts are talking about that, but remains to be seen. That is a weekly chart on oil. All right, you guys probably didn't think I was going to throw you the oil curveball today, did you? Oil futures. Well, we look at that in this class because it has such an impact on a number of stocks. In fact, if you look at the S&P 500, I'm just going to show you right now. If you go through that 500, which is a great thing to do on any given day when it's a heavy news flow or a big news cycle, just take the percent change, and we'll keep that there. And I'm just going to click on it again. Look at all the oil. It's loaded with oil. Look at this. It's just oil, and there's defense integrated oil. A lot of oil that's been moving, and down here as well, just tons of it. So we've got some strength there, and with that strength, we are getting some breakouts. Just like we're breaking above some highs here, we're going to take a look at a couple of those here. Of course, it's in the news. I did hear today too that Israel, I think they said they still have a couple of weeks left at least. They've got full air superiority, so they're just flying sorties over Iran just nonstop. No, they don't have any air defense over there right now. And so this could go on for a while. We'll see what happens and what cards get played here. But yeah, big jump in oil prices. All right, let's hit a review real quick from last week. A few of the classes we were looking at. This is DE. Gosh, DE is still holding kind of sideways here. We own 25 shares of stock. And, oh man, where are we? We still have 25 shares of stock in this company. We're going somewhat flat. You can see where that bull flag pattern was. And remember, this particular trade really centers around the tariffs and bringing more manufacturing back into the U.S. We'll look at CAT here as well. We've been keeping eyes on CAT, but manufacturing in the U.S. could benefit some companies. Of course, this is the farming side. Do you guys see that breakout? I mean, we're holding prior highs right there. We talked about this, but that's a longer term flag. Sometimes these longer term flags will extend the price length of what it took to develop to the upside. Let me change the color to show you. So this move up here, sometimes you'll drag approximately, I'm just going to try to eyeball it, somewhere that same length. And what we're really, although we have a small position of 25 shares, it's expensive stock. We are holding above that big round number still, and it's just kind of steady as she goes. It's still making upward progress. That's a higher high, clearly, than here, 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 and here. We took out this big high. This is a higher high. And when you sometimes see this marching where you're still up there kind of hitting resistance, coming down, you're hitting resistance again. By gosh, I mean, you're hitting resistance, but notice you're kind of inching higher. You're stepping on up to a higher low. And sometimes that can mean a breakout. Well, we'll see what happens here, but we've got eyes on it still. It's only 25 shares, and on to the next one. Now, this one has not really materialized yet, although it had some good buying we saw. We saw it actually break out above that. They refer to this as kind of a right angle triangle. I'm going to really zoom in here to just kind of show you where we're at. You can see that there's a long-term possible upward move to the upside, and there you go. I just want to show you the full extension of what you might get with that price pattern in terms of a longer-term flag out of this sort of right-angled triangle breakout. Here you are. Of course, we're down today. Some of the staples are down today. Remember, this is our Oreo trade, Mondelez. They've got more than Oreos, but we've kind of nicknamed it that. The interesting thing was, and a couple things still, I'm going to really zoom in on this triangle because it does give us some insight. Now, I've whacked out there we go. Anytime you kind of adjust things, you always go back and just go back to your auto so you can see that y-axis. It'll pop back, and then, heck, we can actually all see it now. All right, so here's the thing. We did take out these highs, and a lot of times when you take out the high, and we did that on some really good price movement, it was some decent volume, we came right back down, but sometimes it'll fake out. And what I'm looking at is this still a higher low? It is. Notice where we have our stop at when it's no longer a higher low. In other words, triangles are known for this, and they can still break out, and oftentimes they do. They're known for that coiling motion. And right now, technically, we still have that coiling motion, but we put our potential exit level below when it starts to break down here. Now, what was kind of interesting is we did take out prior highs right there. We took them out, but then we dipped back down. We already looked at this, and there was really good, buy-in in terms of what the money flow is picking at. Notice, even on this move right here, this is a significantly lower high than here, and clearly over here, but money flow all the way above that. In other words, this last high right there said, yeah. Now, if this were to kind of dip down lower and break, that could be an early warning sign. If it starts to break up, early warning signs. It's still part of what we were looking at, but anyways, quick review. The last one, BWA. This is still kind of steady as she goes. You can see the flag pattern that we've got in here. You can see where we have our potential exit with that stop right here. And this is that really longer term flag pattern. We did have a potential exit right at the prior high. Instead of taking it all the way to the top, still dragging, so we'll just see what does unfold here. But you can still see, sort of the remnants of that flag pretty clearly still in place. The one thing I have to say, too, is you did make a new high here. High or low, still some interesting signs, but boy, it's dragging his feet. There's no doubt about it. It's dragging. Okay, well, that's kind of a review of our positions that we put in last week. Just taking a look at the chat. Welcome to all of you just joining in here. Let's take a look now at one of those oil stocks that's showing strength with oil, and that is going to be MPC, Marathon Petroleum. I've got us kind of set up to look at this. Here is a break, and we're seeing some strength with that break right now. Okay, there's a little bit of a gap up in here. As you can see, we gapped higher, we consolidated. We did take out, which we do, I would just say traders like to see, longer term resistance. We took out some highs. We had a second level, right, of highs right there. And that would have actually been our T1 target. We'll call that T1 a target one, but it was a very, very shallow sort of a flag pattern here. Take a look at that. I mean, it's just right down at the bottom, holding this gap right here, but we broke back up above it. Again, a lot of these are probably showing strength with oil, but we've cleared some highs. Really good momentum, at least thus far. RSI breaking into a range. You can see it's held up. Money flow, really incredible in terms of what it's showing us right now. That's cumulative buyers relative to sellers. There's your breakout right there. All right. Well, I mean, there are a few companies out there. Just as a quick note, some of the bigger names, CVX, Chevron. You can see that it broke out. You got XOM. It broke out as well. These are a little bit more of a laggard. In fact, they haven't taken out these prior highs. You got FANG, which is another one, still no higher highs, but MPC, you've taken out some highs. And sometimes those that are showing strength above the others, some of the leaders, they might be the leaders on the next go around too. So, we just broke above some highs here, and we're just like 1 day or 2 days. I guess we technically closed above there a couple days ago, above that range. So we can look at this as a possible retracement level. And that seems kind of high. It comes upward right about 200. If we're measuring our range off the bottom, that's about just above 200, which is a big round number. We've seen so many stocks that will come up to those big levels and just kind of pause. And I'll say this too, if we're looking at 180 over here, 180, that's where some major prior highs were. So there could be quite a bit at stake from where we're at now as we may inch up higher through that range. Okay. So you have to say too, because we're looking at oil, we have to just say, gosh, there could be a lot of volatility as well. This chart, though, is showing more strength relative to the others. Clearly, we're above the yearly highs, which a lot of companies in the oil group are not. In fact, the majority are not above. But this one kind of maybe one of the stronger charts out there in terms of oil. A lot of traders might consider that. So let's do a couple things. Let's look at a trade initially, just straight up trading this. We can do maybe a round lot. And then we'll look at potential exits. And then I also want to combine here with it an option trade too. Okay, so we look at the option trade. Some of these spreads in here about 20 cents or so. We'll look at an option trade. We want to do a side-by-side comparison here is what I really wanted to look at. First off, the trade itself. We have a huge upside potential if it were to fulfill that flag. I'm going to right-click under Ask. I'm going to go right under Buy Custom. We'll do an OCO bracket order here, and we'll set this guy up. Now, we don't know if it'll go to 200. I'm going to go ahead and just set that for 200 now in terms of our upside target right here. We'll just do a full round lot so everything stays the same with 100 shares, what we're looking at right now. And let me set this down a little bit. We'll go ahead and we'll take a look at this on the chart too. There's a good tail cancel on both of these orders. We'll just stick with the day order right now in anticipation of a follow through to the upside with the strength of oil. Now, we really want to determine where do we want to place that potential exit at with the stop. There's a quick look at the order confirmation dialog. It's pretty straightforward, but I will say this, it's not that cheap. You can see that our buying power effect is about 8,500 if we were choosing 100 shares. I'm going to go ahead and put it through as 100. We could always choose 50 or whatever we wanted to do, but there you go. A little bit more expensive. We'll send that guy through right there. And let's just look at our levels on the chart now that we've got. Now, here's a stop. Okay, and here is the potential target. Now, I also want to know, I'm going to put an alert up here at 180 so that I get notified via text or just below 180. I'm going to right click, create alert, at or above, check prices is my little note. I'm going to post that in here so that I will be notified. Like I said, text message or email. I do text, but sometimes we've found that if it kind of rounds around these longer term resistance levels, we've taken some of those trades off in the past, right? We've done that previously. Now, with this stop, there are a few different ways to do it. We can set up a stop if we wanted to, even at a moving average. if prices go below a moving average, let's say a shorter term moving average, one of those averages that we have used is the 9 or 10 day simple moving average. Fine, I'll just use the default. I think that's pretty common, the 9. You can see how much price action might take place once you get above there. If, it's an if, and we got above there right here, but if that flag pattern starts to unfold, at least getting us to 180, which is real close to 10 points away. Still, even that shorter term move, the true target is about 200 if this whole move runs up. But still, you got about a 10-point move, and you've got some really good buy-in in terms of volume over here. You've got some good momentum in an interesting industry that's been really hot as of late. Things can change, but that's what's driven us up to where we are right now, if it were to unfold. So I wanted to emphasize that because oil can be volatile, and it's certainly cyclical. But it is moving, so we'll take a look at it there. So the question is where do we put that exit at? And basically, we don't want to risk too much, but at the same time, we want to give it some flexibility. And a lot of times, what you're looking for are prices to really kind of hold above a moving average, particularly as you have taken out the T1 level. I'm going to set this back. There's your T1, which is a prior high. You really can't see it until there we go. There's your target 1. Once you get above that, and we're seeking a target 2 with the full price pattern target, we might just say, I'm just going to slip this right below the moving average there, just like that. Give it a little bit of room, and there you go. So that's an adjustment here. Again, we have the capability to set it at that moving average. I want to actually pull it back a little bit and just monitor this trade. So that's the stock itself. All right. Joe, it works until I slide off my desk. When I slide off my desk, gosh, that line's just going to be way crooked. But there you go. How about CAT? Sorry, the CAT was one we were going to talk about with DE, but there's CAT right there. CAT broke above this level. We have a trade in my other class on CAT. It still hasn't broken above there. We did a trade on CAT. Yeah, another class, but it was the markets and sectors class, which is tomorrow, Wednesday, an hour after this class, time-wise. But yeah, just as a quick note, CAT had been moving too. That was a sideways channel we did as well. By the way, that was right at its moving average. So interesting. Sorry, I did a quick skip on that because you're right. I did say I was going to hit CAT, but I wanted to show that real quick. All right, well, let's do this. We've looked at, on one end, we've got stocks. But that's not the only way to trade, right? We do have stocks we can look at, and we do have a stock trade on here. We can make a comparison with that stock right over here, and we can say, how about an option trade on that? And in this class, we've got full flexibility. We can do a short put. We can do a short put vertical. I'm going to look at both right now. We want to compare those. Let's put our chart back on and take a look over here. Now, if we were looking at about 31 days, because remember, we're looking on our trades here on the swing trade about real close to 14 days, right, on the high side. So what we'll do is we take the 14 on the high end, 10 to 14 normally, but 14, and we times it by 2. We want to give ourselves about twice the additional amount. Well, we've got a contract right there that fits in pretty nice to about 28 days, 31 days. It happens to be the July contract. And I want to just take a look first at, let's just say, a short put. Although, and I take this approach because some people might want that bullish to neutral perspective. They might like the higher implied volatility. VIX right now is, I think, just below 20. And we're up here at 34. So there is a little bit of additional premium here that we can maybe work with. We do have open interest here in the hundreds. The volume on this is just about 2 million already, with a little bit less than, a little bit more than 30 minutes left to go in the trading day. Here are the deltas. We normally choose between a 20 and a 40 for just an expectation, a percent of the chance of it going below that level is how delta is used. But a quick note on delta, for every $1 increase in the underlying, this range will move by the amount of the delta. So if we were looking at a 20 to 40, and by the way, yeah, because we're on the put side, there you go. I'll kind of cap it here because that kind of encompasses our 20 to 40. This is a little bit above the 40, but you're looking at a 165, a 160. Again, delta is used as a percent. A lot of traders will say there's a 34% expectation of it going below 34, below 65, and that would be 34, an expectation of 34% or 24%. So not too high. They still think it's going to stay above that level. Well, let's just take a look at it right now. If we were just to throw in, where's the 65 versus the 160 look? There's the 160. So it's clearly below this range. And you'll notice that was that longer term support level right there. Boom, 160. So if I just sell a put at that level, what does it give me? What does 160 give me? At the 24 delta. Okay, and what does that look like? So it's about $235 if we hold above that level would be the expectation. If we can hold above that 160 by expiration, or at least, I mean, that would be the max gain is 235. But then there's your buying power effect, 2,367 as it stands right now. And that amount does vary. Now, of course, our break even drops. Some people like to place a trade on this. Some people like to try to buy stocks too by selling the put. That's not what we do here, but some will do that. You know, we don't teach that in this class, but we have other classes that do. Now, on the other side, if we wanted to take a 5 wide here and I want to buy the 155, we can turn it into a short put vertical. We're not getting as much. We're getting 90 cents, but we can define the risk better here. Because remember, if we go below the 160 at expiration, we get assigned shares. We're on the hook for that guy too. If it goes below 160, 150, 140, we're taking it all the way down. But if we were to do a vertical spread, 160, 155, look what that does to a potential buying power effect, folks. It's no more 2,800. It's 413. But we're only getting 87 as it stands right now. We could always try to get a little bit more, but that's where that stands. But it does lock. Our max loss is totally different, right? Because max loss would look at all the way to zero. I'm just going to show you that again. Sorry, max loss, just to highlight it, 15,756 if that stock were to go to zero with our option. But if we want to define the risk, I'm going to put this guy back on again. So $235.87. What if we just added a couple more contracts? 1, 2. So we got 3 contracts here. What does our risk look like there? Well, our risk is a lot less than just the short put by itself. Is our credit, that credit right there is greater than the 235. Of course, we're paying for 2 commissions, but it's still greater than 235, about 261 right now. And look at the buying power effect. That, as it stands right now, too, because we've defined that risk, less than the 28K. Was it 28 or 23? It's a lot less. It's at least looks like more than $1,000 less, and you're still getting a higher credit. I'm going to go ahead and do this one for now, and we'll put this guy on. There it is. So we've got it on, and again, we've tried to define the risk here is the whole idea. We put one on, and we're going to kind of measure this and watch it as well, just see what does happen. You know, because sometimes, hey, maybe the prices don't move, but if we go sideways for a little bit, we don't do too well on the stock trade, but we do well on the short put trade, short put vertical. All right. Well, we kind of spent some time on that one. By the way, there are some interesting trades out there too. I know many of you, we've been looking at top moves, top kind of prices just breaking out and shorter term breakouts with flag patterns, etc. But there are some out there too, like for example, Pepsi. We looked at this yesterday. Now, Pepsi, I'm going to hide this guy for just a second. Pepsi's been flat for a long, long time. Flat, flat, flat. But for example, there are some of these out there, but they're really not setting up for swing trades. We don't really look at these until they start to either break up, maybe start to flag, or even break down, come up and retest. But some of you, I do know, like to look at those longer term patterns. There's another one out there too, along with this one, sort of some of the bottoms. And these are both kind of in that consumer staples range. Target, look at that. That has been flat for the longest time. It's kind of been pushed down too by that big round number, the century mark, 100. Now, if you get above 100, it could be interesting. So sometimes on these trades, I think it can be interesting just to say, you know what, right click and say, if I get above that big level, maybe I then find support at 100. So I'm going to say breaking 100, because sometimes out of these long basing patterns, you start to get those flag patterns. This is just different, but I'm mixing it up a little bit. You guys, so you can see a few of those. And there you go. So yeah, there are other sorts of option trades. I'm just taking a look at the chat. Yeah, there are other option trades you could put on something like that because it's been flat. And I mean, that's one way for premium to expire. I mean, we just looked at a short put, but in this class, we're looking for the move, right? We're tying that move in. But these can be interesting to keep an eye on because out of the basing pattern, when you get price compression, these are just maybe way early to the game. But after you get those, they can start to move. And this is going to just kind of be an interesting way to kind of build sort of a backlog of stocks that are maybe more recognizable names. Pepsi, Target, they trade a fair number of shares. And what's going on with those? Look at this divergence on that RSI. It's positive divergence for sure. All right, let's continue on. Here's one here too. This is APP. This is AppLovin. Now, AppLovin has come out of a range. In fact, we've talked about this pattern a little bit in the past. This is referred to as, if you have a move here and you have a move there, notice what I'm pointing to. I'm pointing to the gaps. There's a big giant gap there on those two. This is referred to as an island bottom. Now, has it had time to form as a bottom? Keyword there is bottom. That's one thing that technicians will look for. A gap down and a gap back up above. One thing I can say is that we did make higher highs and higher lows right over here. And I believe it's pretty safe to say that that gap was probably tied into, there it is, earnings right there. See the earnings gap? There you have it. Wait, what was it? 144 to 167. So there was an earnings gap there after all. And that's what can cause an island bottom, because it can be a reversal. A lot of times, you guys, it's what it is that drives that higher is a big news event, and it will formulate a bottom there. Now, will it hold? We'll have to wait and see. It's always of interest, but we do have this very interesting, look at this, a lot of action down there. We just held right there. Gap down, pause, bounce. We kind of gapped up to this level. We held again, and here we are again, folks. That right there is going to be your 350. 350. So it's right between 300 and 400. But what do you see on this? I mean, we could also put, let's say, for example, a short put. It doesn't have a signal yet. We do not have a close above the high of the low day. We could say that it may be entering an interesting level of historical support that it may or may not hold up on. But prices broke up above there. We have a higher high, technically right now, a higher low on this AppLovin. We've had also pretty good strength in terms of momentum using RSI as a guide, right? Pretty good. And the other thing is too with a bull flag is you tend to retain a lot of your price action. Notice that? I mean, we didn't come up hard and then come down hard. We're actually holding it. Sometimes earnings can flip because there are better prospects for the company. This is one I will, we can place a trade on this week if we get a signal. And that signal might easily be a trade back up above the 9 or 10 moving average. The 9 is the default there. There you go. We're looking for a resumption of that upward trend where a lot of price action can take place if it gets back up above that level. Because it's had a long time to pause. In fact, this is, how many days? I like to look at this. Yeah, that's over a month. we've been sideways here, generally speaking, a month. If I look at this day right there, we've done nothing. We're still in the same spot. So this could be interesting. In the meantime, you know what we could do? We could actually put on a short put vertical if we wanted to, just to see if, because sometimes if it goes flat for a while, depending upon how much belief we have in this going up or at least staying sideways, let's put one on and let's just monitor it. We still have our 31 days out, which is perfect for our time frame. What was this level? So there's the 350, some support. I would say there's another support right here. I'm going to go down here and just pop in a Fibonacci and see what that shows us. Okay, yeah, this level, the 38.2, and it looks like the 500, or excuse me, the 50% is just about 320-ish, or very, very close to it. I'm going to pull this guy off and we'll take a look at it. So just wanted to get a general range because I could see a gap here. And a lot of times there's support there. So that is clearly below 350 by about 25 points. So down here, what does that 325 look like in terms of the delta? We don't have a 325. We got a 330 and a 320. And there you go. They're right at the bottom end of the range that oftentimes we'll look at. So what does this look like? I wouldn't say the spreads are fantastic. It's a higher price stock, so there can be some flexibility there. But this does have 1,000 open interest. This is in the high hundreds. Let's try that 330 and the 320 spread. Just as on a single contract, we're just waiting to see, we're defining the risk right here, but we're waiting to see if the price of the stock can hold above that level by expiration, 280 relative to 720. I don't know how you guys feel about it, but I want to put it on just based on expectations. Let's just say a trader has expectations that it's going to hold the 350 and maybe go sideways, and they can in turn try to earn a little bit of theta, the time decay. That's 33 cents a day, 30 cents a day. Remember, it's the expiration of both that we make our max gain. And again, that max gain was going to be right in the range of about 270 or so, 270, 275. I want to put it under about, we'll see how it unfolds. But what I'm going to do is I'm going to put another trade on here if, in fact, we do get a close above the high of the low day. This is the low day right now. Here is my alert. Click above that level, create alert, and just title it. Hold. Will it close above the high of this low bar, which it is, inching lower on the pullback with the market. And that's really the beauty of waiting for a hold. What do you get? You get potentially lower and lower prices as it still sets up in the pattern. That's a pullback. That's a bull flag pullback along a potential support level, right, that we looked at 350. I mean, it's a potential bull flag setup around that 350. You can see it clearer here. But waiting for the hold, lower bar, didn't close above those highs, lower bar, no, didn't close. We can watch this day to day, but let me know when we do close using that awesome tool over here to notify us. Folks, I'm telling you, I've had an alert that was out there for 2.5 years on a long-term weekly pattern. And just one day when I was outside, it went off. I went in. I mean, that was something I looked at as a trade. So that was a weekly range I was looking at. But here's a daily range. AppLovin. I put this on so we could put a trade on this week if we do get a hold. All right. Now we've got one also that's setting up BK. Folks, that's not Burger King. It's a little past lunchtime. That's not Burger King, though. That is Bank of New York. I don't know where they get that at, but it's BK for Bank of New York. Financials have been the other source of strength. A quick pause just to look at our sector grid so you can see it. Financials have had, where are you? Right here. They've had this long-term sort of flag pattern here. I don't know. Is it going to break or not? This one is. I mean, I don't know. It's on the verge of it. You know, we'll see. Financials, though, have shown some real strength, and I've seen that lead the pack in the S&P 500 for a number of days at different times. So let's pull up BK again. BK, and you can see us. This was different because we are getting that consolidation that we're seeing in the index, or excuse me, in the sector. call that more like a bull flat, which is really just a, I've heard it referred to as a flag with a very strong breeze. Anyways, it's not giving back anything. It's keeping a lot. You could see us, we did take out these highs, and that's what was interesting too. We did take out these highs, and we're actually, when you can hold above there, a lot of traders will say, not all of them, I'm sure, but if you could say, I'm going to point to the closing prices right there, and look at that. Did we hold above that level? We've been holding a lot above that level, and it could break out and run, but we're right near resistance. So what I'm going to do with our Bank of New York is also put in, we'll just click right here, right above these highs. Just let me know if we're breaking out. Breakout question mark. Take a look at it. Utilize this, folks. Again, to set those up, go to Setup, upper right-hand corner, scoot on down to Application Settings, Notifications. I put my text message in, my phone. Get those in about 3 to 5 seconds. It's been my experience. And then you can also put an email address in too. You can have the computer make a sound, but that won't help you guys if you're out on your yachts or what, out golfing. That's the nice thing about the phone. It will follow you there. But I know you can set up your email to do the same thing. Folks, if you're finding value from our discussions today in this class, do me a favor, just smash that like button. Lets me know that this was informative and helpful for you too. And subscribe right to bottom right-hand corner of the screen. Love to have you all on board, folks. Also, yeah, thank you, Barb. I don't think we got a, Barb mentioned subscribe. Appreciate that. No surveys today. So let's keep it going. We do have another couple minutes. I wanted to show you guys a couple more to take a look at that could be on a radar here for us. We've got, so here is, going back to technology for a little bit, kind of looking at a few different sectors, but there's Dell. Dell was also, it's right on the verge of us putting a trade on. This is one that we did have to, I want to put a note out so that we can watch this one, but Dell has really held very well after taking out some prior highs. This earnings right here, I believe there was a guidance higher here, and prices gapped up. There is a gap. This too actually has a circle for you. Island reversal. So a gap down and a gap up. You can see where the island is. This is it. I can actually also see too, there might be a shoulder, head and shoulders pattern right there. But the breakout is what we're looking for. And we were already above there today. I was watching it, but we went back down again. We could be close to it. Gosh, it's right on the verge. But I am going to, if we do, we'll put a trade in for this class on this one. Certainly if it breaks above the flag, I'll put it down here. So I'll just say breakout. Question mark. It may be a breakout. It may not. But we'll end on that guy right there. Dell is one. I'm sorry, one more. GLW. Let's just lastly, a little bit of a flag holding above 50 is what kind of caught my attention here. GLW Corning. See the flag coming up and right there, resting on the prior highs right there, plural. There's a high right through that range as well. It's a big round number as well. The half-century mark, we could say, right there too. So those are the ones we're going to be watching for this class. We'll put those trades on as well, if in fact we do get signals from them. Yeah, BJ, they'll keep you on your toes because when that comes off, I'm like, okay, what's going on here? That's why those little notes on those can be very, very helpful too. I'm going to go ahead and do this last one. Look at this. Right click, trend line. I just drew a trend line. You got to do that with this drawing tool right here though. Just the diagonal line. Click again, you got it. And then right click on it. Create alert with drawing. Trend line break in this case. All right, well, we'll finish up on that. I think you guys have a pretty good sense. Oh, dang it. You have to go at or above. If you just let it go, see, it defaults as below. All right, I'll type that back in again. Yeah, trend line break, question mark. All right, everybody. Well, it's been great being with you. We looked at a few of today. We sure did. We'll keep tabs on those, and I'll just keep these in mind. We'll put these on later this week if we do get some entry signals. So with that, folks, have a fantastic rest of the day, and we'll see you all next time. Thanks so much, Barb, for your help as well. See y'all.